Hello everyone, welcome back to TechnoChart's YouTube channel, and in today's video I'm going to talk about how to develop a trading plan. Now I'm going to talk about 6 steps through which you can start your trading journey and what should be the 6 step-by-step guide to understand what should be your trading plan. First of all, you have to select a time frame on the chart. Now if you are a swing trader, you cannot do your analysis on a 5-minute chart, and if you are a positional trader, you cannot do your analysis on a 15-minute chart or a 30-minute chart. So selecting a time frame is really important the for understanding the trend of a stock. So for an intraday trader, one should analyze the chart on 5 minute to 15 minute. For a swing trader, he should be analyzing the chart on 1 day to weekly time frame, and a positional trader can also use a weekly to monthly time frame to analyze the stock. So choosing the correct time frame is really important. A long-term investor will not be looking at the intraday time frame to start his investment journey, right? So most of the time people are choosing the wrong time frame on the chart, and this is where they are doing the first mistake. Secondly, risk management. Now risk management is one of the most important things of trading, and most of the times people are forgetting that risk always comes with reward, or reward always comes with risk. Now for an intraday trader, the maximum risk per day should not be more than 1 to 2% of your entire capital. So let's say that your entire capital is 1 lakh rupees. Okay, so if you are a trader with 1 lakh rupees capital, now you cannot afford to lose more than 1 to 2,000 rupees on any single day, because you have to live to trade to another for another day. And that is why your maximum risk should be around 1 to 2% of your capital for on a particular day on a particular stock as well. So this is one of the most important things. Now for swing traders, on any given stock you should not be putting more than, first of all, 10 to 15% of your capital, so that even if the stock falls and you do not follow SL, you're not going to lose much. But following SL is one of the most important parts of risk management, and you should not be keeping a stop loss of more than 7 to 8% uh, of more than 7 to 8% on the deployed capital, so that you're not going to lose much. So let's assume that you have put 10% of your capital on a particular stock. You have put 10% of your capital on a particular stock, and now you have kept a 8% SL here, right? So on a 10% capital, if you lose 8%, you're only going to lose 0.8% of your entire capital here, right? So this is a very manageable risk that we are having right now. And most of the time people do not calculate the position sizing when they are entering into a stock, and they do a bigger position sizing with a bigger stop loss will lead to a bigger loss here, right? So this is one of the most utmost important things here. Now for a positional trade, you should not be having a stop loss of more than 10 to 15%. And basically this is to you can even diversify your capital into 10 to 15 stocks and put a 10 to 15% SL on individual legs for a positional trade. So this should be your ideal stop loss levels per trade, basically, and one should drastically be following these kind of stop loss levels. Otherwise you are, sooner or later, you are going to blow up your account. Now you should not be over leveraging. In case of you're doing FNO trading, you should not be over leveraging by buying out of the options, basically 2 or 3 times out of the money options, and then trading 2x 3x quantity. Avoid over trading. If you have hit your maximum SL per of the day, then you should avoid trading and have progressive exposure. That means as soon as your trade goes into profit, then you can increase your position sizing. Rather than averaging on the downside, you should keep on averaging your trade as the profits increase on the upper levels, right? Now select strategy based on market conditions. So basically most of the times you have to decide, if the market conditions are ranging, then you cannot use a trending market strategy on a ranging market. If the market conditions are volatile, you should be reducing your position sizing so as to get decent returns and not to lose money on multiple SLs getting hit on both the sides. And if you are using a trending market, basically, then in a trending if there's a trending market, then in a trending market you have to select strategies that are going to give you money in trending market. So you can use super trend, you can use moving averages, that gives excellent trend analysis for the trending market here, right? So this is also one of the most important things, that you have to select the strategy based on market condition. Now Entry strategies. So there are many types of entry strategies. Whenever you have, firstly you have, once you have decided what are the types of market conditions here, you have to decide whether you want to trade breakouts, whether you want to trade pullbacks, or whether you want to trade crossovers. So in conditions where the markets are trending, you should probably try to focus more on breakouts. When there is a volatile market, or probably there are range bound markets, then you should be focusing on pullbacks and retest trading. And you can use crossovers whenever there is a trending market. So entry strategies you have to decide based upon the market conditions that you have right now, or at that current point of time. So stop loss. Now, stop loss is one of the most important thing that we had discussed, and you can keep percentage stop losses of different depending upon your trading style. You can keep percentage stop losses. Now, you can use trailing stop losses as and when the trade goes into your direction. You should move your stop losses into the direction of the trade, so as to make, or so as to protect your profits. So stop loss is really important. The last and final thing that I'm going to talk about is target. So generally, I talk about, or we generally take trades based upon fixed target, that is risk to reward ratio. So if our risk is 1 rupee, we are generally trying to book the profits at 2 rupees or 3 rupees and more, right? So risk to reward ratio has to be maintained of more than 1:1. Definitely, a preferable risk to reward ratio is more than 1:2, 1:3, and you can use trailing stop losses, basically using EMAs and super trend in case of trending markets. So this is a 6-step guide on how to start or how to develop your trading strategy, and how you can design your trading strategy here. Apart from that, we are now coming live with the swing trading mentorship program, where I'm going to discuss more about how to pick stocks for swing trading as well as positional trading. Now we are going to talk about stocks, how to pick stocks for 50 to 100% returns using stage analysis, relative strength, and discussing variety of trading strategies such as volatility contraction pattern and moving averages strategy, and how to trade breakout effectively. So we are going to talk about weekly analysis, daily analysis, how to understand sector rotation, and apart from that, how do we use different charting screeners to filter out stocks. So this is a 5-week session starting from June 7 till June 22, and starting from June 2022. So the course fee is 3,000 rupees, and this is a one time fee for 1 month of a mentorship program. Plus, as well as you will get around 3 to 4 Q&A sessions as well. So totally we'll have around 10 to 15 hours of sessions, live sessions. And on apart from that, 1 month access to private Telegram channel for stock recommendations on whatever the stocks or whatever the strategies we are going to discuss. So the link will be there in the description below for the mentorship program. You will be added, you will get the joining link for Telegram on your WhatsApp as soon as you pay using the link in the description below. Hope that majority of you join our mentorship program for understanding swing trading, to select stocks, how to select stocks, how to exit stocks, how to avoid big losses and all. Right. So thank you. Hope you like the video and this adds value to your trading. So see you soon, and thank you.